Hey there, everybody. This is Thomas Wood with ValueCharts.com. We're going to take a look at crude oil, and we're going to discuss the three main reasons that I believe we could see crude actually bounce a bit next week after what we've done this week. Today is Friday, January 22nd. So let's take a look at the three main reasons that crude could bounce next week. Now, first reason we're going to look at is based on a candlestick pattern, and that is what we call a hammer. Now, this is a hammer pattern. It's a long wick to the downside, close higher than the open at the bottom of the down move. Okay, so we're pretty extended to the downside. We just had a nice move down over the past 2 weeks off of what we call a bear flag. Now we're stalling, and we have a hammer. This is a bullish price pattern. Okay, so this is a bullish reversal pattern, and the trigger for that is going to be when we break the high of this bar next week. So next week, if we go above 32.26, which as of right now is the high, there's still a couple hours left of trading, but if next week we go above the high of this week's price action, then we should trigger that hammer pattern. The second reason is we're pulled away from what I like to call the gravity line. The gravity line is an 8 exponential moving average, which is this light blue line here. Now, what the gravity line does, as you can see, every time the market gets pretty far away from the gravity line, it likes to pull back and at least tag it. So again, we get really pulled away. The distance between the price action and the gravity line is great. Market pulls back, tags the gravity line, and sells off. Tags gravity line, sells off. Tags gravity line, sells off. Did it back here as well. Sold off, bounced back up, tagged it, pulled down again, bounced back up, tagged it. Okay, so the second reason is we're pulled away a pretty significant distance from the gravity line. Now, when we look at this and we go, okay, well, how far do we expect it to bounce? Well, the answer to that question is we expect it to bounce back to at least retest the gravity line or get very close to retagging the gravity line, which is, again, an 8 exponential moving average. So the first reason is the hammer at the bottom of the down move. So we have a candlestick pattern saying it should go higher. Then second reason is we are pulled away from the gravity line, which suggests that we start to pull back up and retag that gravity line. It does not mean that the downtrend is over. It just means we expect a little bit of a bounce. It does not trigger until we break this week's high next week, so on Monday. And then the third reason is we look down here at what we call the MQ cycle finder. Now, the way the MQ cycle finder works is when we're trading a candlestick reversal, we want to see our histogram bars change to bullish, so change to green to confirm that it should be getting ready to start an up cycle. All right, so as you can see, we have a green histogram bar here in crude oil confirming that, hey, we should start an up cycle in this market. So what does that tell us? So now we have an up cycle starting, or we're due for an up cycle. We are rolling over on our histogram with the MQ cycle finder. We have a hammer pattern. We're pulled away from the gravity line. So all of this goes to say, watch next week for a break above this week's high, which we're still climbing. It's 230 right now, and we're still bouncing higher going into the close of the session. So watch next week for a break of this week's high, and then we'll look for the market to continue to climb a little bit over to retest that gravity line there. So those are the three main reasons I think we could be getting ready to get a bounce in crude. Now, again, the trend is still down. I'm not saying we're getting complete trend reversal. It may end up turning into that, but at first we're just looking for a bounce, and we treat it like that. We do not treat it like a full-blown trend reversal. So one thing I have to mention for you, if you have not already tried out the Value Charts Academy, I would definitely encourage you to go over there. Value Charts Academy is just a free training course, and it's about 8, 9, 10 hours worth of recordings and webinars teaching you the foundation to grow on. It's establishing that firm foundation that you can use to grow on and increase your trading profitability. So it's going to go through things like risk management. It's going to go through price action reading. It's going to go through creating a trading plan and a trading log and how to follow those and stick to those, and then a whole lot more. And that's completely free. All you have to do is go to valuecharts.com, and it'll pop up on your screen, put in your name and email, and we'll send it right over to you. So that's all I have for you for today. And until next time, happy trading.